sign for the market, because if this is sustains, then inflation will come down. See why the market has been falling. The market is falling because it is fearful of inflation. It is fearful of inflation, and most of the central banks now are in a hiking spree. And if crude oil sustains at a lower level, the general expectation that probably the central banks will increase rates, but at some stage either the tightening probably can pass, at least if not completely reverse. So that is one hope. Now the steep fall in the crude prices, that is coming because of the fear of recession. Now because of the excessive monetary tightening, there is a fear that probably the economic activity will slow down. Now already in Europe, economic activity has slowed down very considerably, and because of the Russia-Ukraine war, there is a gas crisis in Germany. They are also talking about rationing the gas there. So the impact is much more felt in Europe than in US, but economic activity in US also is likely to slip down, and probably there's a fear that it can just about get into a recession, which means 2 quarters of negative growth. Now of course US is slightly better placed than Europe, but it cannot escape. Similarly, in case of India also, we can't escape the fallout, but it will be definitely limited compared to what's happening in Europe and US. The last data that came from in India is the PMI services data, and if you look at that particular data, the PMI services data shows that the economic activity in this case is 59.2, which is 11-year high. Which is a 11-year high. This is the last 11 years we have not seen this particular data, which means the service industry has picked up. So if you ask anybody who is not particularly in the hotel and tourism industry, they're saying that everything is going full. Everything is going full. Events are taking place, marriages, then travel. So all these things now almost have come to pre-pandemic levels. Almost they have come to pre-pandemic levels. Auto sales, though it is slightly down still compared to 2019 June, just about the before the pandemic June, we are still down by 8-9% comparatively, but still there is a substantial pickup right now. The GST collections is very healthy, and we are now averaging above 1.4 lakh crores per month. So all those things are good. Only thing is that the RBI has now forced hike rates, mainly because of the inflation, which is caused by imported crude. And then of course in India we have the issue of the dollar USD INR. Now this has been going up, and it has breached 79. It has breached 79 levels, and though the fall in rupee against dollar is modest compared to what's happening in the rest of the world, because if you look at the emerging market currencies, you look at the euro dollar, GBP dollar, compared to all those things, rupee fall is slightly limited. And RBI has also taken some steps in the last couple of days to help the to contain the fallout because of the rupee. Because if the rupee continues to depreciate, then we will have an issue as far as the crude oil imports is concerned, and that will be inflationary. Now the other important thing that of course they took is the windfall tax on ONGC. So that is where the equity markets issues come. There is a windfall tax and windfall tax on ONGC. Then export duty on petroleum products exports, export duty on petro products. So this is where the Reliance got affected. If you look at the fall, there's a sharp fall in Reliance, right? So Reliance Industries was greatly affected along with ONGC and other stocks, mainly because of the export duty on petrol products. Okay, because the government feels that the supplies are getting limited because of the higher export realization. So they want to ensure that more domestic supplies are made available. So they have ensured that can be done by putting export duty there. And because the crude prices have been substantially high, ONGC has been earning good amount of profit, and so they want to tax it. So because of all these things, government wants to get some revenue which will offset the excise duty concessions which they gave last month. That is the reduction in the petrol prices, diesel and gas prices were all compensated to a large extent by putting a windfall tax on ONGC and export duty on some petrol products. And that is the reason why we saw heavy fall happening in Reliance and ONGC. So Reliance, ONGC were very badly affected because, and so these are the stocks which fell considerably. and of course they have now stabilized. Now there are some other stocks which are getting the benefit because of the fall in the crude prices. Most important thing that another important event that happened today is that there are reports which are coming that China is likely to announce a 220 billion stimulus package. 220 billion stimulus, 220 billion of government bonds buying, which means so much of liquidity will be released in the market in order to spur infrastructure development again, which probably can lead again to demand in copper, steel, and all. So this has to be watched. This has to be watched. And copper today at one time was high 4%. So even today Tata Steel went up because of this. So this development has to be now monitored, because whether this is sustainable or not, we have to see whether there is going to be a shift again towards higher commodity prices, which is not good, because if higher commodity prices means profitability of auto sector will come down. Again it will become inflationary. So today in the world we have got conflicting way of different countries are doing different things. Look at countries other than China. Most of them are now looking towards increasing the interest rates. China is looking towards flooding the market with liquidity again. So how each one is going to balance, I think probably that is left for the judgment in the future. So, but these things we'll have to monitor to see what impacts it has on individual stocks. So we will look at those. US markets also have to some extent has shown some sort of stability after one big fall. It has also started to look towards some sort of a rally mode, and we have to see this whether this rally mode continues to pick up, or probably it's going to reverse again. So we will look at some of these technical levels, then we will look at possible strategies. Now then we will also review what we said last week and whether the strategy failed, or whether that strategy, what is the loss that was made in that particular strategy. Okay. Now particularly we were talking about butterfly strategy last week. So before that we will look at the technical levels. The Nifty, so fundamental points we have seen. The hike in interest rates by most of the countries will continue. China is trying to pump in more amount of stimulus through government bond buying. India has announced measures to ensure that the rupee fallout is contained, and also the crude has fallen significantly. These are the fundamental factors in the last 1 week, and that impact was felt in certain stocks like Reliance Industries and ONGC. So going forward, it again depends on new developments, because suddenly government imposed duties on steel, it fell. Commodity prices tanked. Commodity stocks fell. Now China is again trying to infuse liquidity into the system for infrastructure development. So we have to wait and see how that development pans out. So now if we look at it, S&P is now on there still going up. So first we will look at the S&P, because a very strong correlation between S&P and Indian markets. So now S&P is now of course it rallied to 39.45, then it fell, and it has now started to climb back. So this level is going to be a very important resistance, because this is a 23.5% retracement from the top in Fibonacci. If you look at it, so on a close to close basis, if you see, this is there's an important point of resistance. So we have to wait and see whether this is able to cross that particular level. Okay, so that's going to be a very important place to be watched. If it crosses, then probably we are looking at some higher level which should take it closer to the 4100 levels. Okay, so a 4100 level cannot be ruled out if positive developments take place, but before that it has to cut this particular level, which is 3940, 3950 levels. Let us see how it goes. Now today it is quite bullish, and as long as it does not break this low, this is the important low right now, and as long as it does not break this low, we are looking at the upward climb as far as Nifty is concerned, as far as S&P is concerned. So what does this translate into in the Indian markets? Now if you see like S&P, no, this has rallied and this has crossed the 23.5% retracement from the top. If you look at the from the top, if you draw, so this is the place, right? So 15,974, 980. So that's a quite a good sign. That no, so that means any fall now will have some support, and then it will we can expect some sort of a move, and then probably some sort of a support at that level, and it can go up. So now the 15,974 from 15,184 or to the 200 is something like 800 points, right? So 700 to 800 points. So any fall right now, if it is moving towards the right now we have got at 16,150 levels. So let us look at the 38.6% retracement. Now before that, what we will do is that we will look at the Fibonacci level from this place, because this is an important weekly pivot point. So we look at so 16,176 is the 61.8% retracement. So probably tomorrow we can have some sort of a resistance closer to that place, and then the next resistance can easily 16,445. That is the 78.6% retracement. So there's a chance that probably we can go right up to 16,445. So from if it goes up to 16,445, then in that case, though, the support will come from 16,445 minus 800 points, because the 23.5% retracement of the entire move from the peak till now, till the bottom of 15,184, it comes closer to 800 points. So if it goes to 16,440 or so minus 800 points, approximately it will be 15,600 to 700 levels. So it can hesitate closer to the 15,600 to 700 levels before it starts to fall again. So that's an important place to watch. So right now, I think we should keep our the things going right up to 16,445. But let us see whether through trend lines whether such a thing is likely. So what we will do is that we will draw this trend line and keep and draw the support resistance points there. Support resistance place. So this is the last channel support lines. So on this we will draw a parallel line. So the first line, now see most this also came very closer to that. So I think we will take this line. So now next week, because this tomorrow is this one, so this is extending up to 16,589. So 16,445 is a strong possibility. 16,445 looks to be a very strong possibility. And from there probably we can have some fall. So 16,445 is still 1,200 points from the bottom, which is what we have seen most of the time. It has the capability to move up to 1,100 to 1,200 points. So 16,400 is a possibility, and from there probably we may have some fall, and this is going to be an important resistance. That's 15,925. So we will have strong support emerging at this place, which is now 15,739. So now that level being broken, so 15,735 is a very important level, and we should be looking towards 15,735 as a place where we need to look towards putting our stop losses. But before that, let's look at whether which are the other points that we need to consider. So this is there was a dip, which is a substantial dip right to 15,511, and after that we have not seen any major dip. So in the daily chart, if you look at it, so there's a small dip. So whether we want to consider that or not, we will wait and see. But this is a decent dip. So 15,511 to whatever that's happening right now, we can put a 23.5% retracement of that and see whether if that is going to be penetrated now. So right now, assuming 16,145 is going to be a turnaround situation, So we need a break which is going to be below 15,650 levels. That is the place of 78.5% retracement. So we may have to see whether we are going to get something like a 15,650. So unless it starts breaking 15,650, or when it slightly moves up, then probably we will edge towards 15,750. So I think we should be clear that probably 15,735 to 750 is likely to be the most important area which has to be broken before it starts to fall. But when it starts to fall, from wherever it is falling, minus 800 points can be a support. Minus 800 points can be a support. So we have to look at something like, if it goes to 16,200, 230 levels, then minus 800 points can come to 15,400 levels. That's 15,380 to 15,400 levels. If it goes straight away to 16,445 levels or so, then 15,700, 600, 700 levels can become a support. So right now we should be looking at something like a 15,740, 750 levels as the levels where probably we should be quite careful. But before that, we can also keep the 15,000. This is the high which came at 16,025, and also 15,927, 930 levels. So we can keep that level also in mind for those who want to keep a very, very tight stop loss. So having said that, now today's low can be a very important low. That is 16,045. 16,045 itself can be, because that's going to be tomorrow. If it's going to cut this particular high, which is 16,150, then we can keep even 16,045 as a stop loss. 16,045 as a stop loss, because if you have one particular day's high is cut, then probably see here also, if you see this day high has been cut, so we can keep this high as a stop loss. Now this day has been cut, we can keep this as a stop loss. So now this opened here, so once this cut, then so basically depending on whichever day high is cut, we can keep that particular place as a stop loss for us to do. So here it cut this place, so I think if you look at it, this was an important low, and we could have kept this low as also 15,620, and that day it moves up to 15,520 level. So here we would have kept this particular low as a stop loss, 15,687, and then again we would have moved to 15,890. So we are long now basically in the market, and we need this trend line is support also. We have to see this trend line. So this is a trend line which we need to watch. So it has to now get below. Now it is coming closer to 15,690 right now, as I told you, and this could probably keep going up. Now the same trend line, if you can place it at the top and see where resistance will come. See, this is the place where tomorrow the resistance can come. So tomorrow the first resistance can come 16,210. So tomorrow the first movement, if you look at 16,210, be careful, don't try to go immediately long. So wait for some fall. Then in that case, if the fall takes place, then in that case you can keep this particular low. See, this is the place where probably today it fell and took support, right? So this could be a place, or this could be a place. $16,097. So the fall could go right up to 16,097. Okay, 16,100. So what we should do is that it may go to 16,210, and from 16,210 the fall could be up to 16,097, or it could go right up to little bit down, 16,082. So let's look at the market tomorrow from the first perspective of 16,080 on the downside and 16,210 or 220 on the upside. Okay, so that doesn't mean that we should blindly sell, but I'm giving you a range which is likely to be for tomorrow. Now let's look at the weekly possibility. Now see, this is normally, as I told you, is around 500, 550 points. So if you look at the full week of tomorrow, in this week, so this is going to be a fifth day, 4, 3, 2, 1. So 15,661 was the low for this. If you take, this was the Monday, right? Monday, Tuesday, Wednesday, Thursday. So this 15,660. So around 500 points. It is 16,160, under 30-40 points. So 16,200 should see some sort of a resistance in the market. So 16,200, be quite careful about it for doing the intraday tab. And when it comes closer to the 16,090, look towards whether we should go for a buy, because if it goes to 16,210, now you take a 23.5% retracement from this low. That is 15,785. There was a minor dip, right? So 16,210 minus 15,785. So 425 points into 0.235. You will have something like 100 points. So that's why I'm saying it could come closer to 16,090. So 16,090 to 16,095, I think is the place where we should see some sort of a support as far as this market is concerned. So the weekly, and also if you look at it, this 16,172 is the gap, and the gap is going to get closed. 16,172, the gap is going to get closed, and we have seen that earlier we have had some sessions where we have said there's a very good chance that within 20 days normally such gaps get closed most of the time. So already it is 1, 2, 3, 4, 5. So almost 20 days now this gap is getting closed and it is moving up. So that's one interesting observation that that could be made. And now we have this gap which is likely to get closed. So probably we will have some sort of a resistance closer to the 16,200 levels. So closer to the 16,200, 210 levels, we could probably expect some sort of a thing. So today, if you look at it, the range was quite low. Though it was a gap up opening, we have only range which was 100 points, But on a close-to-close basis, it was quite a movement of 140. I think yesterday was a close of 15,000, almost 16,000, and 130, 133, 140, 135 to 140 points, which is there. So normally close-to-close basis, we will have something like a normally, because the option price tells us that we should not be more than 180 points. Normally, double the option price should be something like 130, 140 points. So tomorrow close is unlikely to be more than 16,270 to 80 levels. So anything rally towards 16,010, be careful about it, okay? Because the trend line resistance is coming closer to that, and from there could be a possibility of a dip that could take place in the market, okay? So this is the analysis for Nifty. Now we look at Bank Nifty, then we will look at the strategy which we saw last week and what we should do. So Bank Nifty in fact has done extremely well, and that's mainly because some stocks like HDFC Bank looks to be forming a bit of a bottom. So now we are seeing as we saying that higher highs and higher bottoms and higher tops is a place that we need to see, and we are getting a higher bottoms here. So this is a higher bottom and we are getting a higher tops, so which means that probably we are looking towards some sort of a further push in the market. And so where are the resistance points that are likely to come will come along with this channel line right now. So now this should be the first support, because this has been broken very clearly today. So this should be the first support line. So today's low should be an important low, and a further fall probably could take it a much lower. So that is one point that please make a note of it. Now let's look at let's move to the next pivot point. So that pivot point also has been cut. So let's keep this. So tomorrow probably we could expect some sort of a resistance initially at this level, 35,152. So now it's 34,920. So first break towards 35,150, 152. Please please be careful about it, because there is a chance that we may have some sort of a fall from around this 35,000 plus. 35,000 plus can have a fall, and if it falls, then probably you can keep this particular low itself as a stop loss and buy on a 23.5% retracement from this bottom towards whatever high that we are getting. Okay, so that's a place that we can look towards buying. So this is a very important trend line concept which we have explained to you, along with Fibonacci, can give some very good insights as far as the place where we should look towards buying and selling, and that you can synchronize with our pivot points. Now, what is the pivot point? Now, this is 34,965 plus 34,553 plus 34,920. So that 34,812 is the pivot point, and it has closed above that. So R1 is going to be minus 34,000. R1 is 35,072. R1 is going to be 35,072. So be careful about that, around 35,075 to 35,100, because today already there has been a good rally. So after it goes about 35,070 or 35,100, if it starts falling, then probably an intraday high might have been made. So you wait for a fall which could be right up to S1 levels before you go for a buy, because there is a chance that the pivot level can also be broken and it can come to S1, but it may not go below this low. And so you can look towards buy on dip from this particular level. There is 33,757 to 35,100 or 200, whatever high that you are going to get. That into the first Fibonacci point of 23.5% is where the market will probably look towards stopping. So when you do a calculation, because you have to keep your homework prepared. So tomorrow, if you look at it, R1, where is it going to come? And based on the R1, you can look towards whether if there is a fall from that place, then you can put in a sell and keep that particular high as a stop loss. Then on a dip, then buy at some level which could be S1, closer to the S1, keeping today's low as a stop loss, because if today's low is cut, then probably we have to presume that some sort of a top has been seen, okay, at least for some time, and then we have to see how the retracement and all takes place. So now let's look at the overall big picture scenario as far as Bank Nifty is concerned, and it has also broken the 23.5% retracement. So it could probably, again, this also is one where it can head right up to this level, because this has been broken. So probably we could see there could be some resistance which can come. Now today this high has been broken, so tomorrow we could see, as I told you, this high is 35,149. So 35,149 can probably look towards that, and then probably it can push towards this particular that day's low, which is 34,659, and today's low is also 34,553. So it could be a range which is 35,650, 660 to this particular high. So probably every level that you go from here, probably then in that case this high can, next high this could be there. So every previous day one high or a particular day's high from this level can also act as a resistance, which could be used for intraday sell. So what I'm saying is, if you are going for intraday sell, so let's say you sell here 35,149 and put the previous day high, one high above that, 35,449. So if you want, you can sell closer to 149 and you can go for a sell of 449. Mostly it will not happen. So it may look as if it's a 300 points, but 300 points in normal intraday in Bank Nifty is just possible in the present circumstances. It has a huge fall of 250, 300 points which happens this. So you can look at this place, and similarly, if you get a buy, you buy closer to this and put in a stop loss below this particular low itself. So this is how normally you look towards probably looking towards some sell positions that you can always look towards to do that. And if you get something, say the Fibonacci also, you can use this particular high for a strategic sell. That is, this has been crossed. So as and when it comes very closer to this place, you can look towards putting your sell positions. You're putting your sell positions there. So this is way you can probably look towards initiating your intraday as well as strategic position. Now, having told you this is the, if at all there is going to be a fall, what you should do is that, see any pivot point, low, high, okay, the last support will come closer to 78.5% retracement. Mostly it can halt at 61.8 itself. So the one thing that we have got is 78.5%. So what we should do is that a very simple thing that probably you can look at it is, say let us say the same Nifty, you take it. Now take it from this low, because that is a because there is a close which is below this close, so we can take this low. It is 15,785. From 15,785 to whatever high that you see, in that you take a 78 point. Now today let us say, assuming it falls from this place, it is 16,150. Now the low that we got is 15,785. So let us look at that. 16,150 minus 15,785 into 0.235. It comes to 85 points. 85 points you add to 15,785. So the important stop loss is that 15,870. So as long as it does not fall below 15,870, at this moment you can look towards buy. So you keep 15,870 as a stop loss and then look towards buying on dips as far as Nifty is concerned. So probably the dip can take you right up to 15,925, 930, because that's the last important place of support resistance place, and it has now gone very closer to that. So I think probably you can look towards this particular place as an important area for a stop loss. Okay, so now we will look at the strategy that we suggested last week and see whether how it worked or not worked, and probably what should we do. Now last week we thought market will go between 15,700 because it was looking a little dull. So we were talking about a butterfly strategy, 15,700 put, buy 15,500 put, sell two quantities. This is buy one, and buy 15,300 put, one quantity. So this was coming at 24 rupees again, right? So now the market has gone above that. So the maximum loss is going to be only 24 rupees, one. And what we suggested is that if you're going to put in at 24 rupees here, we suggested that you also buy a call spread on the opposite side to just recover this 24 rupees. Just recover this 24 rupees. That means for every transaction that you've done, maybe you'd have done for 50% of that particular quantity, right? So 50% of that particular quantity if you're done, then probably there is no loss. There is no loss. Last week we made some gains. This week we may not make a loss. So that way, if you look at it, if Nifty is going to move at some points, which is between these, then there's a very good chance that you will probably look towards getting some sort of a decent profit from this place. So right now the market is on a rally, so we wouldn't like to suggest either putting put spread, butterfly put spread. We will not suggest. Probably we have to wait for some dip and then go towards a call spread. Keeping 15,785 as a stop loss. So I told you, keep 15,785 as a stop loss for that. So let's wait and then see what should be done. Then we could look at it. Now we also suggested that for the month end, you can look at 15,700 put, one lot buying, then 15,000 put, two lot selling, and 14,300 put, one lot buying. So this is for month end, July month end, and this was coming closer to 125 rupees at that time, right? So let's look at what is the price for that right now. We'll go to the NSE option site. NSE option chain. So 28th July, 15,700 right now is 125, and 15,000 is 34 rupees. So that is double. So 34 into 2 is 68. This is 125. So 56 rupees. 14,300 is 10. So 63 rupees. So this entire thing now has lost its value, and it is now 63 rupees compared to 125 rupees. The question is whether we should remove that or we should not remove this. This is the question. And I think probably it is better that there could be some dip. Okay, the dip can bring it back at least to 15,925, 930 levels, or slightly lower. That point of time, probably this will get some value back. There is no one what is 63 can come back very closer to this. At that time, we'll remove that. So on a fall, now having sense still, because the maximum loss is always known. So let's wait for that, and then remove the structure. Okay, so this is that we will see next week. So this is the present position, and I told you that right now at this day, because the rally has already taken place, at this point of time there's no point in considering an option strategy at this point of time. So always now look at this from the point that if it comes lower, okay, if it comes lower closer to the 15,850 or 900 mark, 15,920, because we are going to keep 15,850 or so as a stop loss, 850 or 860. So if it is going to come very closer to the place of 15,925, 950, that time we can look at a butterfly option strategy, which could be between 16.2 and 16.4. 16.2 and 16.4. We can look at it at that point of time. Okay. So right now we will not look at it, but if it drops down, then you can look at that particular strategy. Okay. So this is as far as the option is concerned, and let's look at some stocks. Particularly, let's look at Reliance, Tata Steel, HDFC Bank today. Reliance. So Reliance Industries seems to be looks like settling right now. But it's on a weekly trend. It is still down. If you look at the weekly trend, it is probably it is down. We can say it is down, but it is taking very firm support, which I told you. It could be around this 2365, because there is a 23.5% retracement from the bottom to this particular top. So this is likely to be a very important support. So what we can look at is this day chart, daily chart, right? So assuming it starts to move above this particular high, which is 2433, then in that case we will have a lower top, lower bottom. Okay, we will have a lower top, lower bottom scenario. So if that be the case, then we can look towards buying, because I think the negative factor has already come, because they already put the duty. So what more immediately is going to come? So in case if it starts to move up, then probably it will look as if things are likely to look up. But fundamentally, the fall in crude prices is not a great sign for Reliance. So the amount of profit that you may get in Reliance, we have to wait and see. We can't rule out. But technically speaking, 2433, about 2433, we can look towards entry. Probably this is a very probably this could be a important high. So we can make an exit closer to the 24, probably up to 2540, 2530, 40. It can always go up. So we can make an exit closer to that particular place. So we can get some 4-5% and leave the trade. Now we will look at ONGC. So this is a daily chart. So ONGC has had a big fall. So at this point of time, I think it may not be worthwhile to look at it, because this looks quite weak at this point of time. So we will leave ONGC right now. Look at Tata Steel and HDFC Bank. So Tata Steel, it started to move up because, as I told you, due to this fundamental reason which came from China. If that is going to probably get entrenched, then we might have seen the bottom as far as Tata Steel is concerned, but not very sure yet, because there are a lot of policies and changes that can come. China will do something, US will do something. So commodities, I think, better to stay away despite whatever that can happen. Okay, because it is prone to so much of policy changes that can come, interest rate tightening. So if possible, better to avoid commodities. So concentrate on some other sectors, and particularly let us look at TCS. Little more, we can take. They are not likely to be regulated much. So TCS, this is going to be a very important resistance area. So if this is going to be broken, that is the 33, 61, 62, then in that case we are looking at an important bottom having made already, and TCS can become very attractive for buying for a long-term up move. So keep a watch on TCS about 33.50 or 33.60, and this could because we have there is of course the long-term some resistance lines are still there, but it can move at least up to this 35.50 levels. So about 33.60, at least it can move up to 35.50, 60 levels, and there we can see what's going to happen. So it's definitely going to be a buy on dips. Suppose if it rallies about 33.60 also you can buy. If it falls also you can buy. That is, you can buy closer to 31.45, 31.50. You can buy closer to 31.45 to 31.50 levels also. So this is we can do that as far as TCS is concerned. We look at HDFC Bank, because gets as if HDFC Bank may have bottomed out. Got a feeling that HDFC Bank, because there are three lows and all the lows have held. These three important lows have held, which is 1318. So probably HDFC Bank may have made its bottom. So we can be because here if you look at the trend line also, see this line is also broken. This line is broken. This also gives a good confidence. And now let's look at the weekly chart. So weekly chart, of course, this is the last important resistance level. But from year to year, the 78.5% retracement has been broken. So which gives us the confidence that probably any dip will be bought, keeping this low as a stop loss. Keeping this low as a stop loss. So I think HDFC Bank can be bought on any dips which is closer to this low. Is closer to that low, and it will look like going for a rally. And the monthly chart also, if you see, I think it is stabilizing. So just see, it is now stabilizing. It is stabilizing. So HDFC Bank, please put it under a watch list for a possible buying. And we have seen today Titan announced very impressive result. So let's look at Titan. Titan has done well. Titan has done well. And it took important support here. And let's look at the Fibonacci from this place. So you can keep 1744 as a stop loss. Now it has crossed 1987. So I think you can, since it has crossed this particular level, we can keep this particular level as a buy place and keep 1744 as a stop loss. So very unlikely that is going to come. This is only for cash market investor, I'm saying, because there is a huge thing for a trader. But it looks as if it is on a it is like it has come closer to a buy position as far as Titan is concerned. So let's look at the daily chart here. So today is a huge gap up. Today is a huge gap up. So probably there can be some retracement in that gap up because the results were very good. So when the gap gets closed, you can look for buying. That is 2029, 2030 levels. I think it looks to be a buy at this place. So just watch Titan at around this level, because this is an important support resistance place, and that has been broken right now. So let's look at Titan from that particular perspective, right? Okay. Now let's look at Maruti, because autos or Tata Motors, because the Tata if commodity goes up, then auto stocks can have a fall. But today Tata Motors also has done well. So generally speaking, Tata Motors is finding higher tops, higher bottoms, even not only in daily chart, but I think in, let's look at the weekly chart also. If you look at it, it has not gone below this 372, 373, and the rally about this gives a feeling that higher top, higher bottom has been formed as far as TCS is concerned. As far as Tata Motors is concerned. So we look towards going for a buy for Tata Motors here. So we keep 373 as a 372, 373 as a stop loss, and probably look towards buying Tata Motors on dips. So these are the probable investment trading strategy ideas that you have. And Nifty at present, the short-term trend looks to be still on the upside. So it has to break at least 1 week low for us to make an assessment that it is all over as far as this particular correction is concerned. So right now it is on the up move. So let's look at whether a particular week's low is cut. Till that time, maintain your long position. Keep a stop loss below a particular resistance level, which is the below the last resistance come support level, or a Fibonacci level, and that level right now looks to be 15,830 or 840 levels. And again, to impress upon that, so let's look at the weekly chart. And in this week, the low is 15,660, right? So 15,660 is this week low, and so that is the stop loss for this right now. The big stop loss is 15,660. If it is going to fall below 15,660, then we can presume that this particular movement of correction is over. But we feel that even move below 15,850 can just easily drag it down below 15,660 levels or so. So the big support is 15,660, and the important positions are 15,850, 860 levels itself. So next week, let us see where the higher low, higher tops comes as far as the weekly chart is concerned. If it is going to have a weak low which is above 15,660, by say 15,700 or 800 levels, and then if it starts to fall, then that becomes a place where we can put in a strategy which is for the put side. Right now, we will not rush into put the put side, because as far as this chart is concerned, that is the Nifty charts is concerned, the weekly charts are much more smooth, much more smooth when compared to the daily charts. So there you get a trend which is much more clear, and probably we could look towards easier assessment of where to buy and where to sell based on the weekly chart. So right now, I think the weekly chart looks to be still on the downside, but again, for us to re-establish that position, we need a move which is above the below the corrective low, which is 15,660 now as far as weekly chart is concerned. So the next move, probably we will have some move which can take place right up to this high which I told you, which could be 16,399 or 400 levels. So the move can come right close to 16,399, 400, and this is the 16,172, where probably we can see some sort of a resistance again coming. So markets being markets, a lot of dynamic factors take place in the market. So we need to be watchful about the situation. All the see, this is the important trend line, and based on this, we can get some sort of an important resistance come support areas based on that. And based on this, we expect that probably this line could be the next important support resistance line, which is coming closer to the even 16,500 to 600 levels, because it fell from 16,793. So the 78.6% retracement have come close to 16,452 or so. So there's a chance that it can go closer to the 16,452 levels. 16,452 levels. So let us see what happens. So if you have any questions now, please ask. Thank you. So thanks for your participation. Next week we'll again go with currency derivatives and how to trade currency derivatives. Thank you very much.